Hello everyone, welcome back to another video. We have finally closed out 2019 and lots of changes happened in the last 30 days. So this is going to be a recap of all of 2019. It will probably be a super long-winded video, so feel free to just skip through the boring parts. Just trying to go over everything, not to hide anything, make everything clear so everybody can follow along. So hopefully there's no questions on what I'm doing, and yeah, and I guess the strategy or yeah, how I've made it this far. So jumping right into income for December, I'm the only one that made money this month since my wife is only paid for 11 months. It's weird. I made $4,615.40. I paid $898 in taxes. I put $461 in my 401k, $230 in the employee stock purchase plan, and then that left me with $2,971.40 in take-home pay. And then, like I said, nothing for my wife. She gets paid 2 times in January. Weird, I know. Rental income, $2,200. So 1,000 of that was a deposit, and then 1,200 of that was actual rent. So the lady has moved in. She has 2 kids, just her, nobody else. I think she, I'm not sure exactly. Well, I do know where she works, but I'll keep that, confidential. Um, so yeah, she moved in December 15th. So she paid a full month's rent up until January 15th. So I finally got 1 month's worth of income in this month. No other income, and that left us with 6,800 in gross income and then $3,000 take home pay. So really not a good month, mainly because we're just a one income month. And then I did not get any bonuses this month either, which was weird. Usually, like last month, I made $12,000. This year, sorry, December 2018, I made 12,000. This December 2019, I made 4,600. So I'm going to quickly kind of go over my income since when I started this. So it's been a little over 6.5 years, I think now. So I graduated high school in May 2012. Got my first job shortly after. That first year, I grossed $5,000. The second year, I was working at a convenience store this first year. Switched jobs. Well, I guess I was still at the convenience store, but then became salary here in April 2013. So I was salary at like $8.65 an hour, which just killed me. And then I think it was November or December here, is when I switched over to the pharmaceutical company. So once I became hourly, 13, I think it was 11.95 an hour back then. And then I slowly grew up to like 13.65 an hour. But that whole year of 2014, I just cranked out overtime like crazy. So my salary was like, I don't know, 22, 24,000, somewhere in there. I ended up making $16,000 more that year just from working overtime. So started my 401k that year, and my wife, she was working through, she was like a part-time like professor or student teacher, or adjunct, something like that, as she was going through school. So she's a lot smarter than I am. She got scholarships as she was going through school, through college, I mean. She's the same age as I am, a couple weeks older than I am, actually. So both of us are 25 right now. We don't have any kids. My wife actually just finished her master's degree, so she has a bachelor's degree and a master's degree. And then I have a degree in engineering and a degree I just finished this May in business. So both of us finished a couple degrees. I do not have my master's degree, but she does. So the reason her income is so low, I mean, comparatively to mine, I basically worked full time as I was going through school. She worked, but a lot of hers helped pay for her college instead, which to each their own. So the year after that, 2015, stayed about the same for me. Went from 38,000 in 2014 to 37,000 in 2015. The difference, though, I started doing rental properties in 2015, so made a little bit of extra income just from rental properties that year. And then same for her. She upped her hours just a little bit, but nothing too crazy. So she actually was working for the university during this whole entire time. So she graduated in 2016. So you see her move from 5,000 to 20,000. So she hired on full time at the university after she got her bachelor's degree, and then yeah, got a significant pay increase with that. So for me, mine just kept steadily going down. 39,000, 37,000, and then 2016 I was at 36,000. Again, the difference. I kind of shifted my focus, over the course of these 2 years from working for somebody else full time, which admittedly I still do today, to trying to focus a little bit more on myself and my own ventures. And so I started doing real estate a little bit more. So had a triplex that I had purchased, and house number one, which was a house I found for $8,000. Put a couple $1,000s into it. Made about $30,000 when I sold it in June 2016, and then rented out that triplex for house number two. So made $11,000 in income. So even though I made less at my employer, overall I made about $47,000 in 2016. 2017, switched jobs. I was basically stuck in, I worked at the pharmaceutical company for about 3 years. Then I worked for a beverage like wholesale distribution company in 2017. Made 43,000 compared to 36,000, so did quite a bit better than in 2016. But I was salary. I was working probably 65 hours a week on average. A lot of that for free. So but then again, still doing rental properties. So I had all three units rented out. I had to evict one of the tenants for not paying. So a couple months he paid, and then all these months he did not pay. So I eventually sold house number two in October 2017 and profited about $60,000 on house number two. For my wife, she got a promotion at her work in 2017 and bumped up to from 20,000 to 30,000, and then again in 2018 went from 30,000 to 37,000. Her job compared to the ones that I have is quite a bit less stressful, and her benefits are extremely, extremely good. So their health and health savings account's really good. The insurance for both of us is $120 a month here, that's insanely cheap for the two of us. I've heard some people pay $400 or $500 a month for insurance. So yeah, her benefits are just extremely good, and it's a fairly low stress job. So for the time being, we're pretty happy with that. And she's just steadily, moving up and stuff too. For me, in 2018, I switched back to a different pharmaceutical company in the area that I live, and I switched back to hourly, which was my favorite part. I was about $24 an hour in 2018. Worked insane amounts of overtime again. I made an extra 37,000, something like that in 2018 from just working overtime. I did not have any rental properties that year. We moved into a house, and then I kind of flipped that house over the course of a year. We moved in like May or June 2017, and then sold it a year later in July 2018, and then made about $78,000 take home pay. These are take home pay numbers as well, so you can see basically what I'm doing on the side is like I'll buy a house, $8,000. I put 2,000 into it, took home 29. Then I bought another house, put $5,000 into it, and I took home 60,000. Then I bought another house, put maybe 10,000, maybe 15,000 in house number three, and then took home 78. So each time this is just growing a little bit more and a little bit more. I just keep putting the money back into the next houses. Yeah, nothing else really notable for 2018, but that brings us to 2019. So my income dropped substantially. So, and believe it or not, I got a promotion in June, but that promotion switched me from like $24 an hour to $60,000 a year salary. So admittedly, I have not been working nearly as much overtime as I did in 2018, and I've been trying to focus on, finding a house to purchase, which I did in, I think it was September this year, is when I purchased that house. So I'm trying to again just focus on other things outside of work. I honestly did not want to take the promotion because I knew it would be salary and I'd be basically stuck and make less money, which I was 100% correct. So I ended up making about $16,000 less than I did last year, but admittedly working less hours. So I personally would rather work 60 to 80 hours a week and then get close to 100,000 if I could. But With my current job, so I'm a level 3 right now, which our scale goes to level 4. So I'm actually a pretty senior person in the company. I guess at this point I have maybe 5, 6 years of pharmaceutical experience. I work in the quality assurance department, so mainly reviewing stuff that other people have done, making sure we're following the rules, making sure the medicine that we're sending out to patients is safe for them, that's not going to hurt anybody. So there's only really two options I can go in my career from here. I can try to become a level 4, but there's not very many level 4s in the company at all. So that may take me 3 to 5 years is my guesstimate, maybe unless I get a master's degree to become a level 4. Option number 2 is to become a supervisor, which is probably the route that I'll go. Since I've been at the company now for a little over 2 years now, I feel like I'm in the groove of things. I understand everything pretty well. So a lot of my company's hiring a ton of people. So when I first started, we had maybe like 700, 800 maybe, and now we're probably close to 2,000. So in 2 years, we've hired about 1,200 people, and then we have like 600 open positions right now. So still trying to hire tons more people. So since the majority of the staff is new, it's a pretty, I mean, comparatively speaking, like to the first pharmaceutical job, it was extremely difficult for me to move up. Here, it's extremely easy for me to move up. With 2 years of experience at the company, I'm like one of the most senior people, which is scary because, I mean, we have that many people in the company with that little experience. But it creates some opportunities. So I'll probably, see how this goes. I'll probably not apply to a supervisor position until probably another year from now. There are some teams that, like a supervisor, I might make 75,000, so it'd be a little bit higher than what I'm at right now. The downside is, there's certain teams that if I applied to it, I would probably have to work 60 to 80 hours a week and not get paid for a lot of that. There's a lot of teams that have a lot of HR issues where, as a supervisor, you probably have to manage 6 to 8 people on your team. I don't really want to deal with HR issues and, like, he said, she said, and hurting people's feelings. And so, yeah, I will probably wait till the right position comes up and apply to a team that I know is going to be pretty good, that I can, have a decent amount of control over, and maybe pick the people on the team. For my wife, she got another big raise this year in 2019 as well. She went from 37,000 and then got two raises actually. She got one right at the start of the year in January, and then got another one in May 2019. So, yeah, they're really moving her up quite a bit. So she grossed almost 47,000 this year, which is awesome. We did make the executive decision. So 401k wise, last year we basically tried to max out our 401ks, and we got really close. We didn't quite get my wife's 403b, but we maxed the HSA out. We over maxed my 401k out, and then we made a decision in January, but it didn't go into effect until February. We dialed back our 401ks a little bit. That way we could save up more in cash, and then try to buy real estate was kind of what we were looking for. We did not bump it down to zero because we want to get our free employer match, but essentially bumped it down. Like for her, it's like 10% or something. Yeah, 10% exactly. And then her company matches 10%. For me, it's like, I think I put mine at 3%, and my company matches me 3%. And then I have about 5% of my salary going into the employee stock purchase plan, which I get to buy my company stock at a 10% discount. So yeah, that is pretty much it for 2019. So quite a few moves. I'll kind of quickly go over house number, I think it's house number 5. Yeah, house number 5 that I purchased this September. So the house was listed at 150,000. I offered 100,000. She countered back at 120, and then we settled on 110. I had to fix the foundation and then a couple, paint the walls inside and put new carpets in. So it ended up costing me about $6,000 total. My closing costs were about $2,000, and then I put 15% down. So I am paying PMI. I could have put 20% down, but honestly, the rates were like not any better. So like when I ran the numbers, the rate of return for me to put 20% down was like 14.5%, versus if I put 15% down and paid the PMI, my rate of return was 15%, 15.08. So I decided to put 15% down. I'm going to hold the house for maybe a year, maybe a year and a half or 2 years. And then once it goes up in value, I'll refinance. Hopefully rates are lower, but if not, no big deal. It's at 4.5% interest on 30 years. So I financed 93,500. I did rent it out for exactly what I thought I would. So it's $1,200 a month. I factored in about 2% for vacancy, which is probably an underestimate because it took me 3 months to get it, rented out. So I probably ended up losing some money here. Maintenance, it's an older house. This is not the actual house, but it is extremely close to what the house actually looks like. It's, scary close, but maintenance, it's an older house, so built in the 1950s, 1960s. Get a drink there real quick. Built in the 1950s or 60s, so I factored in about 7% for maintenance costs. If it was a newer house, I'd probably factor in 2 or 3%. If it was an older house like 1920s, like 100 years old almost, I'd probably put this at 10%. So the older things get, the more maintenance that you're going to have to spend. So just a general rule of thumb, those aren't exact numbers. That's not exactly how much you may spend in maintenance, but it's probably a good estimate. So the older the house, the more maintenance you should probably factor in. Management, I'm managing it myself. I pay the gas, the trash, and the water bill. Be careful when you do rental properties. There are some places where you live, like if your tenant, like let's say you have your tenant pay the water bill, and the tenant doesn't pay the water bill. Well, the water bill, like in some areas, like in my area, the water bill is tied to the house, to the person that owns the house. So even if the tenant is paying the water bill and fails to pay it, the water company will put a lien on your house under your name. So ultimately, it's your responsibility to pay the water bill, or have to pay the lien on the house. So basically, what I learned was like, I'm just going to always put the water bills in my name. I'll put some kind of cap on it. That way, they can't spend too much above, like they can't spend $500 a month on water. And then I'll just tack that on their rent. So that way I avoid having lien put on the house. I don't have any additional expenses. Insurance and taxes ended up being pretty close, about $1,000 a year for insurance, and then taxes. This is a guesstimate, so I've not had to pay taxes yet, but this lady that lived here was older, and so she had a lot of exemptions on the house, and so her taxes are like $250 a year. I've already used my homestead exemption on house number 4, which is more valuable than house number 5 here. And so I'm not going to burn a homestead exemption on this house. So my taxes, I'm going to have basically no exemptions. So I am planning for my taxes to go up to probably $2,000 a year from $250 a year. Usually they're about $1,000 to $1,500 a year where I live for a 4-bedroom, 2-bathroom house, about this size. So doing the math here, so my total income, $14,000 that I make from the house, I have to pay $5,000, almost $500 in expenses for utilities, insurance, taxes, stuff like that. So my net operating income was $8,600, but I still have to pay the mortgage, which is $4,900. So that leaves me with $3,674 in cash flow. So almost a little over $300 a month is the profit from this house. But since I only put down 24,000, that made my cash on cash return 15%. So just barely squeaked by and met my criteria. But when you factor in all of the tax benefits, the principal pay down, all that stuff, it may be 30% to 45% rate of return once you factor everything in. So just a little bit how I value properties. Jumping into the net worth, before I do that, I need to talk about another house that's going to be a surprise in January. So I don't even know where to start. I made a ton of moves this December, so it's been a super busy 30 days. The tenant moved into the house December 15th, so I finally got that ready and off my plate. My mom actually was driving around the town that I live in, and there was a sign in a yard where the grass was maybe like 2 or 3 foot tall. And my mom said, "Hey, you may, check out this house on your way home. I think it might have a for sale sign, but honestly, the grass was so tall it was hard to see. And the for sale sign was like very short, like a 1 or 2 foot tall, like you could hardly see it at all. So I stopped by on my way after work and just pulled in the driveway. It definitely looked like nobody was living there. The grass was 3 foot tall. um the for sale sign, like I had to part the grass just to be able to call the number. So I kind of peeked around the outside a little bit. I called the number on the sign and said, "Hey, I'm in your driveway. I'm just curious if this house is for sale." The lady said it 100% is for sale, and I'm the first person that ever has ever called about the house. So I was just thinking, I wonder why. I wonder why nobody would call if they can't even see the for sale sign in the yard. And it wasn't listed on like Zillow or Realtor. It wasn't no MLS out there. It was just for sale by owner. The only marketing was a for sale sign in the yard, like no website whatsoever. So I called her. She said, yes, it's for sale. I asked when she could meet me there. She said she lives 5 minutes away. So she pulled inside she met me at the house, pulled inside the driveway, and it's actually a duplex. It's a house on the right side, and then a garage that was converted into a unit on the left side. um, we walked into the left side, the garage one, and I have never smelled cat urine that thick in my whole entire life. Like you could scrape the cat urine off of the floors. It was so saturated with just like you could hardly stay, like your eyes would water as you would walk in there. So it's in horrible condition. The left unit is fine. It's a poured concrete foundation. It's just a garage. It's just the inside is like completely like gutted. Like needs to be gutted. There's nothing salvageable. I mean, the ceilings need to come down. Every bit of insulation, it doesn't even have drywall. It has like paneling in there. I mean, it's atrocious. The one on the right side did not smell nearly as bad, but just needs to be completely gutted. It has a little bit of foundation issues with it as well. It's like a stick foundation in the back, and then the front is a poured concrete slab. Um, so as I'm looking through this, the cool part is it's on half an acre, so it's a pretty big yard, at least in the area that I live in. So I was thinking, this is like the land itself is probably worth 25 to $30,000 without any house on it for half an acre in that location. Um, so in my mind, as she's walking through it, um, I'm thinking anything under $50,000 is probably like the steal of a century. I would have to pay all cash, of course, because I would never be able to get bank financing on it. It's just in too horrible condition. Um, so I talked to her out in the driveway, and she said, I'm the first person that's looked at it. She's had the sign up there for 3 months. That, and I told her it needs a ton of work. There's no way I can get financing on it, so I would need to, go home, run the numbers, and then I could call her back the next day and actually, give her a price. So as I typically always do, I submitted a pretty insulting offer. I told her, it's probably going to cost 60 to 80,000 to renovate this whole entire place. Um, she doesn't owe anything on the house, she said. So I offered her $10,000 cash for everything. She could just be free and clear of it, walk away with $10,000, not have to pay the property taxes and worry about the insurance. And I mean, it's just she's not in a state where she can even take care of the house, obviously, or even mow the grass. So she countered back. She said 30,000. And her original asking price was 55,000, is what she said. So when she said 55,000, I was like, okay, we may have a shot here. So we ended up settling on $20,000 for this whole entire house. I guess it's two houses technically, a garage and a house that I guess 2 units, but yeah, so $20,000 cash. We will close on June the 7th. January the 7th, here in about a week from now. 100. This is a crazy, crazy deal. The house next door just sold for 180,000. It is completely remodeled and about the same size as this house is. So here's my game plan. I don't really want to tie up um, $100,000 renovating this whole entire house to maybe I sell it for 160 or 180,000. So if I spent 20 and then it took me $100,000 to renovate everything, I'm 120,000 in to make $60,000 profit. So it's a lot of risk to make that $60,000, and I'm going to deplete my whole entire cash position to do that. So what I'm thinking is I'm going to try to spend as little money as possible and market this to the flipper audience. So right now, nobody wants to buy. Well, nobody even knows the house is for sale because it wasn't publicly listed on the MLS. So that probably made me $20,000 to $30,000 right there. The second thing is there are no houses to flip in my area at all. It took me almost a year to find this house number 5 that I bought in September, and it's not even a flipper. But there are, I mean, there's probably 20 companies out there that are looking for houses to flip. So my game plan is I'm essentially just going to deconstruct. I'm going to rip the ceilings down, rip the insulation out, rip the paneling off. You know, I don't think I'm going to spend anything on drywall. I'm just going to get it down to its bare studs, and then I'll list the house like completely gutted. So I'll have to pay, maybe $500 for a dumpster, a roll-off dumpster, and then just throw all the trash and the insulation and the paneling in the dumpster. But basically, just gut the whole entire house, list it back for sale. Maybe list it for 50 to 60,000, somewhere in there. But basically, I'll spend 20,000 for the house. If I sell it for 60,000, I'll make $40,000 and spend almost nothing. Maybe spend $1,000 total. So I like that strategy. It seems a lot less riskier versus spending 120,000 to potentially make 60. I'd rather spend $1,000 to potentially make 40. And I feel pretty confident that it would at least sell somewhere between 50 and 70,000 if the house next door sold for 180. So that's kind of the game plan. I've not even closed on the house yet. First, I'll have to like bush hog the yard or something and get all that taken care of. But so that'll be the game plan. That'll give me something to work on. This is house number 6. Whenever I'm not working, so maybe nights and weekends I can go over there, get a little bit done. I will probably hold the house for a year as well. So there's some, from my understanding, I'm not a tax expert or anything, but the area that I live in, or the state that I live in, if you buy a piece of real estate that you own less than a year and it's not your primary residence, it is long or it's short-term capital gains, and so it's taxed at a lot higher rate. So I will probably hold the house for about at least a year to make it long-term capital gains, and then lower the amount of taxes that I have to pay, if I have to pay any. So that's kind of the game plan. That way it's not nearly as stressful too. Working 40, 45, 50 hours a week. I mean, I can't, demolish a whole entire house or flip a whole entire house all by myself in a couple months like some people can. I know a little bit about working on houses, but I'm not a carpenter or contractor or anything like that. I YouTube stuff and then try my best to not mess it up too bad. But all right, now that that long story is over, so we'll see that in on the next update here in January. I'll put house number 6 in here. I'll probably value it at maybe $30,000 to be pretty conservative, and then I'll have paid 20,000 for it. So house number 4, this is super long-winded here. So I refinanced house number 4 this month. I told in the last update last month that I was going to refinance house number 4. It had appraised at $300,000. So I always feel like the appraisers are pretty conservative. So Zillow had me at 306. The appraiser said it was worth 300. I don't know. It's probably in that range. I honestly think it's probably 310, but I'm not gonna fight with the appraiser on $10,000. So I'm happy with 300. But since I have an appraisal, I'm gonna keep it at $300,000 for now. House number 5, now that we have this thing rented out, I'm going to bump this up $2,000. Zillow still tells me that this house is like 160, 165, somewhere in that price range. So again, just to be conservative, I'm putting it at 142. I did finally update all the vehicles as well. So the truck is at $27,047. Nothing, no changes on the 1946 Chevy. This is not going to change for a long time. I'll probably just keep this at 20 to 25,000 for the next 4 or 5 years. 2013 Honda Fit is at $8,170. So it went down a little bit in value. My truck dropped about another $1,000 in value. Health savings account went up to 15,588, and then my 401k is at 62,331. Well, once I get through investments here, I'll take a look at how we did the last year. Um, Employee stock purchase plan is at 1620, and then my wife's 403b is at $44,032. This is just absolutely crazy. So as of January, I had 34,000 in my 401k, and this year I did not even contribute anything crazy to it. Well, let me actually look. I ended up putting 8,500 in there. So it went from 34,000 plus 8,000 is 42,000, all the way up to 62,000. So this Fidelity Growth Co. K, or FGCKX ticker, that is in this 401k, it's just 100% in that stock. It was up like 90 something percent this year, 98% in 1 year. So it just, I mean, absolutely craziness. It seems like just a no-brainer fund for, I mean, at least for me. I'm 25 years old, so my risk appetite is pretty high. So yeah, and that's by far was the clear winner in my 401k for sure. The HSA's honestly done pretty good too. Not quite as good. It went from 11,000 to almost 16,000. And then my wife's 403b, which is essentially the same thing as a 401k, just for a non-for-profit or educational company. It's at 30. It was at 31,000 as of February, and then is up to 44,000. So she made about 13,000 in hers, which is, I mean, just crazy. So we overall went from $80,000. I'm actually gonna go back here. So $62,000 as of a year ago, all the way up to $123,000 this year. So the market just skyrocketed all year, which it's cool to see on my net worth update that happened. But at the same time too, um, I just feel like I'm buying at higher prices, and so I'm 40 years away from retiring. So I kind of wish we'd have a market crash. That way I could, buy in at lower prices now and then have a rally in 20 years. But so a little, I mean, I don't know, I'm conflicted. And then at the same time too, we've had so much gains over the past like 2 years that I don't know whether I should like sell and go into bonds. But like I have that thought, maybe I just cash out my whole 401k and then move it all into bonds, but keep it in my 401k so I don't have to pay penalties. But maybe move it into bonds. But I don't know. My thought process is I go back to like, no, I'm 40 years away. If it plummets in value by 70% and goes, from 62 down to 20% or $20,000, I'll just be buying more at $20,000, and I'll have 40 years for that to recover. So I guess that's kind of my thought process on it. I'm not super concerned if it goes up, if it goes down. If it goes down, great. I may even bump my 401k contributions up. But it just seems like things are extremely high priced for stocks right now. Um, Employee stock purchase plan. This is just my company, so all of this is in one single company. I'll keep an eye on this. I don't want a huge portion of my portfolio to be in one single stock. I feel like my company's growing, and we've not had a pandemic in a long time. I think Ebola and swine flu was the last pandemics. So the way that pharmaceutical companies work, or at least the ones that I've worked at, like when Ebola or swine flu comes, then you just get like destroyed over time, like all the time. They're trying to get vaccines out, and then the company becomes super profitable. When there are no uh, what are they called, pandemics, or like Ebola and swine flu, then usually they'll start to lay off people. They don't need as many people around unless the company's growing and stuff like that. So my company's growing. I don't know what the future is going to hold, but yeah. So there are already some companies out there in my area that are laying off people. So a lot of the people from those companies are already, joining my company too. So going into debt here, house number 4, we refinanced, like I said. So I now owe $240,000 on house number 4. So let me explain that real quick. I did a cash out refinance. So they valued the house at 300,000. I owed 104,000 on it, and so I had about 100 and well, let me see. Let me make sure I do my math right. I had about $200,000 in equity on house number 4. I can only take out 80% of the value. I have to keep my 20% down payment on there, or otherwise I'd have to pay PMI. So that is 260,000. So basically, I had to pay a little bit of closing costs. So took a loan for 240,000, and then they sent me a check for like 140 something, 135,000, I think it was. So my cash position is now 142,769. So essentially, it was not the only penalty to this is you have to pay your closing costs again, which is like $2,000. Other than that, it's just you're basically just taking out a tax-free loan from your house to move it into cash. The downside is I now have more debt on house number 4. So if I went to sell house number 4 today and it sold for 300, at closing I'd get a check for like 50 or 60,000 after closing cost. Versus if I would have sold it a month ago, I would have got a check for about $200,000. So essentially, it's the exact same in the end. I would have been at 200 and something thousand versus 200,000. So the only difference is I paid the closing cost, which is like $2,000. House number 5, I made another payment there, so it's at $93,074. So my debt went way up. I'm still at a pretty good position, overall. My assets are almost $500,000, and then my debt is 333,000. All my debt is on houses, 30-year fixed rate mortgages. I don't have any car debt. I don't have credit card debt, no student loan debt, no payday loans or anything crazy like that. So it's all just 30-year fixed rate mortgages. Yeah, pretty boring stuff. So yeah, cash position went way up from 20,000 to 142,000. So the timing was perfect where if I would have waited another month, I would have probably missed out on house number 6 that I'll be purchasing here in a week. Because I would not have had $20,000. I mean, or it would have been extremely close. And I would not have purchased the house. Like, let's say I got to 21,000, I would not have put my wife and my family and her and I in a position with $1,000 in cash. So um, yeah, so the timing was absolutely perfect. So 20,000 of this I'll spend and buy house number 6 with, and then I'll just keep looking for rental properties. If the house is 150,000, that means I have to put $30,000 down, and then yeah, I mean I could buy 4 or 5 houses maybe, at least 4 houses with the cash that I have on hand. I just have to find the balance of buying things that are at a pretty good discount, things that are worth 150,000 that I pay 110,000, and I immediately get some equity, or Meet Kevin would say a wedge deal. So I'm doing exactly like what he shows in his YouTube videos. Yeah, just finding properties that are a little bit undervalued, and yeah, doing it like that. Rental checkings account, I am at 1,387. So I made 2,200 of that. So a lot of that I finished paying for the foundation work and then paid for the carpet and stuff. So I lost about 1,000 something dollars between paying for those two. So to end out 2019, my net worth is $432,870, which is an increase of, let me see, some quick math, from 291 up to 432. So made about $140,000 net worth increase this year, 141,000. So averaging about 11,000, maybe $12,000 a month, which is, I mean, that's really good. My pace that I'm supposed to hit is $8,300 a month to become a millionaire by the age of 30. I have about 4.5 more years before I'm 30 years old. So I think I'm going to make it. I am, let's see, 74,000. $74,537 ahead of my goal pace. So I did take a pretty big hit this month. I did some refinancing. I had to pay the costs on that. The market ended up going up. We lost $6,000 in value on house number 4 just from the low appraisal. Trucks and cars and everything went down in value just a little bit. Yeah, and then I had to pay for the foundation repair, which is 5,000, and then the carpet and the paint, which is probably another 1,000 to 1,500. So had to, my checkings account got hit pretty big this month, but then having the refinance money in there is good. I'm gonna try not to get complacent with this. I think this is the most I've ever had in my checkings account, and yeah, for sure it is 142,000. So about 25 to 30% of my net worth is in cash right now, but the game plan is look for more houses moving into 2020. I'm hoping that I can find more good deals out there, and I have the cash to do it now. I'm just going to have to find the balance of not going too far into debt on all of these houses, just in case we have a housing market crash. But as long as I pay the loans, I'm not at risk of you know someone calling my note or it being foreclosed on the house. So. Yeah, so goal number 1 for next year, buy more rental properties. Goal number 2 is finish house number 4, which I didn't really comment on. This is the house my wife and I live at, is house number 4 here. I've slowly been, doing like one room at a time, taking down wallpaper, putting new floors in, putting tile down in the upstairs bathroom. We put new carpets in the upstairs bedrooms. I'm painting the walls downstairs. It's just, one room at a time. So I have to get that done in 2020. We're pretty happy living in the house. It's a nice house and an extremely nice and safe neighborhood. I would say the average house price in my area is probably 170 to 180,000, and so the house is 300,000. So it's quite a bit nicer than the average house in our area. It's not luxury or anything like that. It's maybe 3,000 square feet, 4 bedrooms, 4 bathrooms on maybe point 0.3 or no, it's 0.4 acres, about half an acre, in a neighborhood that has probably 500 houses. So we like living there. For the time being, we don't really want to move, so I'm just going to keep remodeling house number 4. Eventually, here in a few years, I have no idea how long, I will probably sell house number 4 and then maybe move into our forever house, or maybe even move into a rental property fixer upper and start flipping some houses. But right now, we're just hanging out in house number 4. So. Okay, I feel like I've rambled on long enough. So if anyone has any questions, feel free to comment them down below. Next month's videos are on the screen now. Make sure you like, comment, subscribe. And as always, thank you for watching the video. I will see you in 2020.